Hello, very good morning to all, and welcome back to today's Daily Dose of Market Insights. I'm Kelvin here. Very good morning and happy Friday. Today will be the 20th of June 2025. So before we jump straight into the gist of today's Daily Dose, as usual, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, let's have a quick recap what has taken shape yesterday in terms of news flow, economic data releases, events, and as well as their impact on the various broad-based cross-asset classes, and also any particular economic event or economic data that has been released in early Asia session today before the start of our daily dose at 11 a.m. Singapore time. So yesterday was a rather quiet day in terms of the stock market, US stock market, because the cash US stock market is closed for a public holiday in the US. But however, the futures market is open. All right, so before I touch on, okay, the futures market is open, yeah. So what we could see over here is this. Okay, at this juncture, let me share with you my screen. Okay, so this is the E-mini futures over here. Okay, where is the E-mini futures? Yeah, all right. Okay, so this is the E-mini futures. All right, so this is the hourly chart of the Nasdaq E-mini futures over here. So what you could see over here is yesterday was this Thursday. Okay, all these are Singapore timing. Wednesday, yeah, this hour. Okay, so over here, what we could see is that there was a initial plunge, all right, a plunge over here during the start of the Asia session, the Asia session at 8 a.m. Singapore time last Thursday. So what I could see initially, there was actually a drop in the Nasdaq 100 E-mini futures at 8 a.m. Singapore time mark. All the way, it dropped all the way down to 1.4%, negative 1.4%, before this was the US session over here, then before staging a bounce back up, all right, over here upon the start at the 6 a.m. Singapore time. All right, so before bouncing up over here at this juncture. So right now what you could see over here is that from yesterday low in the Asia at 9 p.m. Singapore time yesterday, Thursday, it now has a rally of 1.2%. All right, so there's actually a rebound, and the rebound takes shape at the start of today's Asia session. So this is the Nasdaq 100. So very similar, you also could see on the S&P 500 E-mini futures as well. So the E-mini futures on Thursday, what we could see over here at the start of the Asia session, right, it plummeted negative 1.06%, and it starts to stabilize in the US session over here, because given in mind that the US session is closed for the public cash market, the stock market is closed, but it continues to slide, and until at the start of the Asia session today, there was actually a gap up. All right, so there is actually a rebound from here of 0.8%. All right, so what causes this turn in the US stock indices futures, that means i.e. the E-mini futures on the S&P 500 and the E-mini futures on the Nasdaq 100 in today's Asia session rally, is actually due to the twist of event from the US White House administration. So still recall that in the middle of this week, there was actually a rising risk that US will take part in the Iran-Israel conflict, helping Israel to actually attack Iran. But yesterday there was actually a twist of event where Trump has now starts to say that he will decide within 2 weeks whether to strike Iran. A change where in the middle of this week, that news flow that actually took place earlier on Wednesday, stating that US may strike Iran this weekend. So now there's a twist of event, delaying that potential strike in Iran, and Trump will also decide whether to strike or not. So giving a kind of a 50-50 dilemma right now in the marketplace. So that causing a bit of uncertainty in the global markets. And over here, that also created a bit of whipsaw on the FX market as well. So before I touch on the intraday performance of the FX market, let's look at the longer term picture on both UK central bank meeting that took shape yesterday, and as well as the Switzerland central bank meeting that took shape yesterday as well. So let's start with Bank of England first. So Bank of England yesterday, within market expectation, holds rate as expected. But however, they give a bit of more of a dovish hold over here. Why do I say dovish hold? So basically, he left rate at 4.25%. All right, as expected over here, 4.25%, and the bank expect a significant slowdown or pay growth, that means wages growth slowdown over the rest of this year, and is monitoring the rising oil prices impact due to the conflict in the Middle East on inflation. So traders now are actually betting further interest rate cuts with a potential quarter point cut in August. And also the Bank of Governors says that interest rate remains on a gradual downward path. So it is more like a dovish hold rather than a hawkish hold. And also given the fact that there could be further potential interest rate cuts coming into the rest of the year, because the Bank of Governor Bailey stated that interest rate remain on a gradual downward path. All right, so there could be still potential rate cuts down the road. And also SMB also continues cuts rates to zero as expected, and also hints, SMB is the central bank of Switzerland, and also hints at more to stop more potential cuts to actually stop the inflow of Swiss franc that actually causing the Swiss franc to strengthen against the dollar since the start of this year. So now the key story over here is this. If you look at the FX market intraday performance over here, the dollar actually rose. Okay, the dollar rose yesterday. It's only at around the 12 a.m. mark Singapore time, we start to see a gradual US dollar decline. All right, so this gradual US dollar decline is also due to the news flow coming out from the US White House over here, stating that Trump now is going to a wishy-washy mode, still hasn't really decided whether to strike Iran. All right, where initially at the middle part of this week he turned rather hawkish towards Iran, but right now he's holding back his horses, saying that he will give a bit of 2 weeks of reprieve to Iran to decide whether to strike or not over here. All right, so with that, the dollar's strength actually set back over here. So what you could see, this is the 5-day rolling performance. Initially the dollar rallied only at the 12 a.m. mark Singapore time. The dollar actually dwindled downwards. All right, so if you look at the 1-day performance of the major dollar pair against the dollar against the major currency, the dollar actually starts to decline. All right, over here. So what's interesting, if you look at from the dollar index perspective, all right, so this is the dollar index. So the dollar index over here yesterday tries to probe the 20-day moving average. So on the intraday basis, it break the 20-day moving average at the 99 level, but by the end of the US session, it formed a bearish shooting star. All right, so there's actually a bearish reversal at the 20-day moving average by the formation of this bearish shooting star. So on the intraday basis, push up but can't maintain the bullish momentum for the dollar strength, and the US dollar index eruptively staged that U-turn and closed below the 20-day moving average, which is acting as a near-term resistance at the 99 level, and form a bearish shooting star. And today there is a negative follow through, by a intraday loss of negative 0.2%. So apparently it seems to us that this is the dollar index, all right, over here. So it seems to us that this dollar strength that was being seen at the start of this week has starts to be dissipated, and it dissipated right at a inflection level, which is the 20-day moving average that is acting as a near-term resistance at 99, where initially yesterday on the intraday basis there's a probe upwards it over here, the intraday push up above 99, but can't maintain that bullish momentum and starts to shape a bearish shooting star at the close of yesterday US session. So this doesn't gel well for dollar bulls from a technical perspective over here. So later I'll touch on more on the intraday technical outlook for today on those dollar major pair over here. So with that, we also start to see a bit of a whipsaw in the gold price as well over here. So if I go to the gold price, all right, over here. So for gold, it seems to us that right now it's attempting to actually break down the 20-day moving average over here. Okay, so there's actually a break of this 20-day moving average right now on the intraday basis. So yesterday we see gold price actually form a doji candlestick upon hitting the 20-day moving average. All right, so yesterday we do have a bearish bias for gold on the intraday basis to retest the 20-day moving average, which is did at around the 3,350 level. And right now during the Asia session is attempting to have an intraday breakdown below the 20-day moving average because of that so-called geopolitical risk premium has started to get dissipated, given that Trump right now give a 2-week kind of a grace period to decide whether to actually attack Iran, all right, over here. And also that also causes oil price to actually slide as well. So if you look at oil price over here, yesterday on the intraday basis, it hit a high of 77.15. So those who follow our daily dose on the intraday basis, we do have a bullish bias on West Texas oil. It hit our first resistance level yesterday at around the 77.20 level mark. So I'll touch on more on that in greater detail when I cover the second segment of the daily dose. So what you could see in the oil price over here. Okay, so from the intraday high, this West Texas oil of 77.15, it actually went all the way down to negative 3%, almost negative 3% before closing positive yesterday at 75.4. Yeah, at 75.4. So after the release of that Trump news flow stating that he will actually allow 2 weeks of grace periods to decide whether to attack Iran. So you see the oil price subside a bit over here. That's an intraday drop of close to negative 3% upon the release of that Trump news flow. But in today's Asia session, there's also a negative 0.26%. But in terms of a Japanese candlestick, it starts to form a bullish white candle, but the candle body is rather small at this point in time. So market seems to be a bit of doing a bit of hesitance whether to push prices higher. So later I'll share with you what are the key levels to watch out for today on the intraday basis for the West Texas oil. And also in today's early Asia session, before the start of our daily dose, I want to highlight the key data, one of the key economic data for Japan, which is the inflation rate that potentially could sway Bank of Japan interest rate decision for the rest of this year. So what you could see over here is that Bank of Japan closely watch core inflation metrics. That is the core inflation that is excluding food and energy. So Japan is pretty weird. They have these two way of defining inflation. You have the core inflation, which only includes ex food. Then you have the inflation core inflation rate, which include ex food and energy. Okay, so if we strip out ex food and energy, the prices of continues to rise above the 2%. So it came in at 3.3%. So if we to look at it over here, so market is expecting 3.1%. Okay, so it actually grew above forecast and also above the previous month of April print at 3%. Okay, so you look at the core rate over here. So if you read at the 10-year trend, it is going to rise steadily, 3.3%. So this 3.3% over here is the highest rate since January 2024. All right, so it continues to rise significantly above that 2% target that Bank of Japan wants the inflation trend to actually hold above the 2% target. So it has been holding above that 2% target since September 2024, after a slight dip below it in July 2024. So since after hitting at 1.9% year on year, that's the core CPI rate in Japan, where the Bank of Japan is monitoring this inflation metric that's excluding food and energy. Uh, since a slight scare to below 2% at 1.9% in July 2024, then thereafter in September 2024, it has been holding steadily above it for close to about 6 to 7 months already over here. So given the fact that it's slowly now steepened upwards above the 2% level, that actually on one hand stating that the Bank of Japan needs to continue to normalize interest rates, all right, by gradually increasing the benchmark policy rate. Right now it's at 0.5%. So technically speaking, it should actually slowly move up with the inflationary trend of Japan. But the Bank of Japan, on one hand, they state that they also closely monitoring the situation, especially on the US trade tariffs policy that could dampen Japanese GDP growth. So they're actually doing this balancing act over here. So what you could see over here is that the dollar yen actually slide this morning marginally. Okay, so let me explain. Look at the dollar yen. So the dollar yen, if you look at from a 1 day rolling performance over here, it actually plummeted down. So it's down negative 0.17% based on the 1 day rolling performance. So there's some sign of yen strength coming back against the dollar due to that rosy continuing upward trend of that core inflation trend in Japan for the month of May, that's slowly inching upwards, that is steadily inching upwards from that 2% BOJ inflation target. So it's actually at 3.3%, right, holding above last month print of 3% in April, and also above trading economics forecast of 3.1%. All right, so with that sum up the first section of today's daily dose. So let me move on to the second segment, which is the intraday technical outlook. All right, so let me make sure that the screen is good. Okay, I think should be fine. Yeah, I believe that the quality of the screen and the voice should be okay. All right, so let us move on to the second segment. So with that, let me expand my screen. All right, let me expand my screen over here. So let's start with the FX market first. All right, with the euro dollar. All right, over here. So the euro dollar, yesterday we do have a bearish bias. All right, so the bearish bias, the first level to watch will be at the 114.10 level. Okay, 114.10 level. And second level, the support will be the 113.60, which is the 50-day moving average. So what I could see over here is that the push up in the euro dollar yesterday, that took shape at 1 a.m. Singapore time to 2 a.m. Singapore time over here. So this push up of the euro dollar is actually caused by that news flow from the US White House administration stating that Trump now give Iran a 2 weeks grace period to allow kind of an indirect 2 weeks grace period to decide whether US were to assist Israel in striking Iran. So that actually saw the dollar so off. And from a technical perspective, right, on the euro dollar, it seems to us that the downward drift that has taken shape from Wednesday to Thursday, the downside momentum has started to lose its strength by the appearance of this bullish divergence on the hourly RSI over here. So what you could see is that yesterday we do have a pivotal resistance at 115.30. So it didn't break above 115.30, and right now during the Asia session, it starts to show signs of hesitation by forming this very small candlestick body over here. But given the bullish divergence that has taken shape on the hourly RSI, and where prices managed to actually stage that minor U-turn on the upside, right exactly close to the 20-day moving average that is holding on to a near-term support level at the 114.40 level. We do not have much conviction that the euro dollar to have that intraday bearish bias for today. All right, in terms of the bearish conviction that we have, the bearish bias on Thursday has been greatly reduced by the positive element that I highlighted on the euro dollar on a short-term basis. So for today, I'll be watching the short-term pivotal support of zone over here will be at the 114.40 slash 114.10 level. So this one is 114.10 level. So 114.10 level was yesterday's downside support area to watch, level to watch, which is now confluencing with the lower limit of this medium term medium term ascending channel support drawn from the low of 13th of May, and as well as the minor swing low of 11th of June. So this will form my short-term pivotal support zone for today at 114.40 slash 114.10, and my upside trigger level will be at 115.30, which is yesterday's pivotal resistance. So if we could have a bullish breakout above 115.30, then I would say that the buyers right now will shift towards the bulls for the euro dollar to expose in first step the minor range resistance level at 116.10 that previously kept that so far kept the bulls since last Thursday. Okay, only above 116.10 may expose the next intermediate resistance at 116.60 slash 116.90 next, which is the upper limit of the medium term ascending channel and the one-time Fibo extension taken from the low of 29th of May. All right. However, if price action suddenly eruptively close not say close have a bearish reversal downwards and hourly close push down below 114.10, then that will expose the next near term support level at 113.60. If 113.60 could not hold, that means the 50-day moving average, then the short to medium term uptrend phase will be jeopardized, because given the fact that price action continues to hold above the 20 and the 50-day moving average, indicating that the medium term uptrend remains intact. But if we start to have hourly close below 113.60, then the medium term uptrend phase will be jeopardized. But in first step, on the intraday basis, the euro dollar may slip all the way down towards this support zone here. Okay, this support zone here of 120.70, 120.30. 1.1270, that means 1270 slash 1230. Okay, let me repeat that. 1.1270 slash 1230. All right, so let me put everything in a nutshell again, because number one, we have a bullish divergence that's being seen on the hourly RSI yesterday. Price action bounced off close to the rising 20-day moving average, which is acting as a near-term support level at 114.40, slightly above our support level of our bearish bias that we have yesterday at 114.10, which is now the lower limit of a medium-term ascending channel support drawn from the low of 13th of May. And yes, even though price action starts to form a small little candle in the last 2 hours or 3 hours below yesterday's 115.30 short-term pivotal resistance level, but yesterday's bearish bias has been greatly negated due to the positive element that's been seen so far yesterday. So we got to be fluid and change the what you call it, our analysis accordingly to the latest price action. So with that, I'll be using a pivotal support zone at 114.40 slash 114.10 for today on the euro dollar. We will flip to a bullish bias, and this bullish bias we call it odds will increase if we have a bullish breakout above 115.30 today during the European session with an hourly close above it. Then the next near term resistance to watch out for will be 116.10. Above it exposes 116.60/116.90 next. Okay, so that's for the euro dollar. Next up will be the sterling dollar. So the sterling dollar, yesterday we do have a neutrality stance, so neutral between 134.80 and 133.70, and right now it broke above the upper limit of this neutrality stance at 134.80. And also the hourly RSI has started to shape a series of higher high over a higher high and higher low after that bullish divergence that has taken shape yesterday as well. So with the bullish breakout above the upper neutrality limit that we have yesterday, today we'll be switching to a bullish bias stance from a neutrality stance that we have yesterday. So using the pivotal support zone of yesterday's minor swing low area at also correspond to the rising 50-day moving average over here, we will have a zone 133.95, 133.70 short-term pivotal support zone. Will flip to a intraday trend bearish bias on the sterling dollar. First resistance level to watch will be at 135.30, which is the 20-day moving average. Above 135.30 will allow the bulls to gain more traction to seek out the next intermediate resistance at 136.40, which is close to the minor swing high area of last Friday. Only an erratic move downwards and a bearish close with a bearish move downwards with an hourly close below 133.70, that is the breakage of the 50-day moving average, that will actually damage or the medium term outlook on the sterling dollar in the short term to expose the next near term support level at 132.60 in the first step. So 132.60 is the minor swing low of 15th of May and 16th of May, and as well as this medium term ascending channel, okay, that I drew from the low of 13th of January 2025 this year. Right, so that's for the sterling dollar. Given the bullish breakout of its upper neutrality zone that we have yesterday at 134.80, we will flip to a intraday trend bullish bias for today using 1.3395/133.70 as my short-term pivotal support level to watch out for the sterling dollar. Next up will be the Asia Pacific currency against the dollar, starting with the Aussie dollar. So the Aussie dollar, yesterday we flipped back to a bullish bias because price action is coming very close to the pivotal support zone that we highlighted, and it indeed bounced off from the pivotal support zone at 64.70/64.55. So it's still trading within this range configuration over here. So yesterday's also hourly RSI also formed a bullish element by this bullish divergence that's being seen, further supporting our bullish bias within this complex range configuration that the Aussie dollar is still evolving since late April 2025 over here. All right, so this is the complex sideways range configuration that the Aussie dollar is still evolving since 24th of April. Okay, so no change, maintain that bullish bias within this complex sideways range towards, in first step, the upper limit of this complex sideways range configuration that has been tested since 11th of June and come breakout on last Thursday as well. So that resistance zone will be at 65.37, 65.45. All right, so only a bullish breakout above 65.45, hourly close above it, will see a medium-term bullish breakout of this complex sideways range configuration in first step, exposing the next intermediate resistance zone at 65.80. However, if price action erratically has the bearish reversal and the hourly close below 64.55, then price action will now slip down towards the lower limit of this complex sideways range configuration in first step, exposing 64.30, followed by 64.07 next, which is the minor swing low area of 29th of May and 30th of May. So i.e. in a nutshell, still watching 64.70, 64.55 short-term pivotal support level to maintain our intraday bullish bias within this complex sideways range configuration, with the first resistance to watch out for, as usual, the top of the complex sideways range, which is the resistance level at 65.37, 65.45. Next up will be the dollar yen. All right, so the dollar yen continues to trade inside this sideways range configuration as well since the low of 27th of May. Right, 27th of May. So yesterday it almost hit the minor swing high area of 20th of May before inching back downwards over here. at 14610. All right, so what you could see over here is that the hourly RSI also hit the overbought level before trading downwards. All right, so right now it starts to print a series of lower high. Okay, what you could see over here. So with that, I'll be using the minor. So it's like a swing. It's also like evolving in the sideways range configuration, since it's coming very close to the upper limit of this range at 14610. So no point playing that bullish bias to have a test at 14610, given the fact that also the hourly RSI is not so bullish at this juncture, as it's already hit the overbought level yesterday and continues to inch down lower by printing a series of lower high. All right, and so now back below the 50 level mark. All right, so with that, there could be a potential drift downwards towards the middle part of this sideways range again. So I'll be first resistance level to watch will be 14550 14550 level, which is close to today's Asia session intraday high upon the release of that upward trending core CPI data, that is Japan CPI data, that is actually reinforcing this bearish movement on the dollar yen on the intraday basis. So using that minor swing high area of 29th of May, also that potential range top as well, 14610, that will be my short-term pivotal resistance level for today on the dollar yen. Bearish bias within this sideways range configuration towards the middle part of this sideways range. First support level to watch 14450, which is the minor swing low ex-post BOJ meeting that managed to survive, and below 14450, bring it down to the middle part of the range at 14390, which confluence with the 20 and the 50-day moving average. All right, only a bullish push out and hourly close above 14610 will see a further squeeze up towards the next resistance, intermediate resistance zone at 14715 14770, which is the minor swing high area of 14th of May and the minor congestion area of 13th of May to 14th of May over here. So that's for the dollar yen, watching 14610 as my short-term pivotal resistance level. Bearish bias towards the middle part of this sideways range configuration that is in place since the low of 27th of May. Right, so that sum up the intraday technical outlook on the major dollar pair. So now let us focus our attention to the major stock indices, starting with the Hong Kong 33. All right, so the Hong Kong 33 also did a gap up in today's Asia session due to that push up in the US stock indices futures. So what I could see over here is that it almost hit our first resistance support level, pardon me, at 2306. All right, so yesterday we flipped back to a bearish bias. We flipped to a bearish bias for this extension of this corrective decline sequence from the high of 11th of June because of the breakage below the 20-day moving average over here. And also what I could see over here is right now is actually a test coming very close to the former minor ascending channel support, now turns into a pullback resistance level at around the 23,500 level. So no change. And also the hourly RSI is also coming very close to the overbought level as well. Okay, he hasn't hit the overbought level yet, but it should be coming back. It's close to the overbought level. So no point continues to play this bullish push up, because the price action has already ran after today's gap up over here. So we'll be using the 23,690 short-term pivotal resistance level to actually have a bearish bias on to fade the strength, I would say. So 23,690 short-term pivotal resistance level, still maintaining that intraday trend bearish bias for a potential extension of this minor corrective decline sequence within its medium-term uptrend phase of the Hong Kong 33 that is still in place since 11th of June. First support level to watch out for will be 23,060. A breakdown below 23,060 may expose 22,700 next, which is the 50-day moving average. So at this 50-day moving average, there could be a continuation of the impulsive up move sequence on the Hong Kong 33, given that the medium-term uptrend phase still remains intact for the Hong Kong 33 at this juncture. Only a bullish breakout and the hourly close above 23,690, then that would invalidate the bearish bias of this minor corrective decline sequence to end and see the start of another impulsive up move, bullish impulsive up move sequence to take hold, exposing the next near-term resistance level at 23,900 and 24,240 in the first step, which is the minor swing high of this Monday, 16th of June. So that's for the Hong Kong 33. Next up will be the Japan 225, represent Nikkei 225. So the Japan 225 and Nikkei 225, or the the Japan 225 continues to get involved, evolving within this minor ascending triangle range configuration that is still in place since 13th of May. All right, so this is the minor ascending triangle range configuration. Tested the upper limit of this minor ascending range configuration, which is our short-term pivotal resistance, before drifting downwards lower since this Wednesday. So no change, still watching the upper limit of this minor ascending triangle range configuration, which is our short-term pivotal resistance for yesterday. So I'll still maintain it as a similar level, given that it's very clearly a resistance that failed to surpass since the test of it on last Wednesday. So yesterday there was an attempt to test of it as well in early Asia session before drifting downwards lower. So 38,850 short-term pivotal resistance maintained for Japan 225 for today, maintain that bearish bias within this minor ascending triangle range configuration for it to drift downwards towards the lower limit of this ascending triangle range configuration, which first support level to watch will be at 38,150. Below it sees the next near-term support level to come in at 37,820, which also confluence with the lower limit of this minor ascending triangle range configuration. Only a bullish breakout and the hourly close above 38,850 that will invalidate that bearish bias for the Japan 225 to potentially see a bullish breakout from this 4-week plus of minor ascending triangle range configuration to seek out the next intermediate resistance level in first step at 39,560, which is the 0.318 Fibo extension taken from the low of 7th of April, and as well as the minor swing high area of 13th of February and 14th of February this year. Right, so that's for the Japan 225, still maintaining our intraday trend bearish bias within our minor ascending triangle range configuration, using 38,850 as my short-term pivotal resistance level. Next up will be the Germany 30. All right, so the Germany 30, yesterday we do have continue have a bearish bias over here, and the bearish bias drift down as expected, hit our support level, and right now it managed to reintegrate back above the rising 50-day moving average. And upon the reintegration back above the rising 50-day moving average, we also see a bullish breakout of this RSI former descending trend line resistance. So there's a bullish breakout in the RSI right now, indicating some form of bullish momentum that is building up on the Germany 30. And where it built up right exactly around the 50-day moving average. All right, so with that, we will now flip to a bullish bias stance for at least a minor rebound phase to take shape on the Germany 30. And also yesterday price action almost hit the 0.618 Fibo extension target on the downside as well, and that's also confluence with the former pin bar low. Right, there's this bullish hammer low of 6th of May. Right, so using this confluence of elements, 22,910 short-term pivotal support level, given the positive observation seen in the hourly RSI, indicating there's a bullish momentum build up at least on a very short-term intraday basis. So for today, we will flip to a bullish bias for at least a minor recovery on the Germany 30 towards 23,010. Above 23,010 sees 23,510 coming in next for the resistance level. That is the minor swing high area that got rejected since 17th of June. 17th of June over here got rejected the second time on 18th of June, which is this Wednesday. Only above 23,510 may see a steeper recovery move towards 23,710, which is the minor swing high area of 16th of June, and as well as the gap down resistance. All right, so only a sudden push down or a bearish reversal and an hourly close below 22,910, today's intraday bullish buyers will be invalidated to see the continuation of the impulsive downward sequence to expose the next near-term support level at 22,630, which is the former minor swing high area of 30th of April over here. Okay, so i.e., given the positive observation that I explained to you guys earlier, reintegrate back above the 50-day moving average, bullish breakout from the hourly RSI former parallel descending trend lines resistance, indicating some form of bullish momentum coming back into the very short term. So for today, we will flip to a bullish bias for the Germany 30 using 22,910 as my short-term pivotal resistance, short-term pivotal support level. Okay, 22,910 as my short-term pivotal support level for the Germany 30. Next up will be the major US stock indices, starting with the US Wall Street 30. So the US Wall Street 30 hit our first support level around the 42,000, 41,815. So 41,815 will be the minor swing low that has formed yesterday during the US session before that gap up in today's Asia session, in line with the bullish tick up in the S&P 500 and the Nasdaq 100 E-mini futures. So while it tick up over here, the hourly RSI doesn't shape a bullish divergence. All right, there's no bullish divergence on the hourly RSI over here. So without any bullish divergence on the hourly RSI, this could be only a dead cat bounce over here. So with this dead cat bounce, from a prudent risk management perspective, we will tighten the short-term pivotal resistance level towards the upper limit of this ongoing minor descending channel that is still evolving since the high of 12th of June, and so confluence with the 20-day and the 50-day moving average, acting as a similar resistance level at 42,350. So we will tighten it slightly lower for today on the short-term pivotal resistance level at 42,350 for the US Wall Street 30. That is representing the Dow Jones Industrial Average. First support level to watch, no doubt, will be yesterday minor swing low at 41,815. A breakdown below 41,815 may expose the next near-term support level at 41,530, which is so confluence with the rising 50-day moving average as well. All right, over here, only a push up and the hourly close above 42,350 that would negate today's intraday bearish bias to see a squeeze up to revisit 42,580, 42,700, that confluence with the 200-day moving average. So only a push up and the hourly close above 42,700 will kickstart a recovery scenario for the US Wall Street 30 to revisit 43,005, followed by 43,290 in the first step. So that's for the US Wall Street 30. Next up will be the S&P 500. All right, so the S&P 500 also managed to do a bounce up as well. So now it's back above the 20-day moving average after closing below it and hit our support level that we have yesterday, our first support level, which is the minor swing low of last Friday at 5,920. The hourly RSI also managed to bounce up from the oversold region over here. All right, what we could see, but there's no bullish divergence. All right, there's no bullish divergence, so kind of indicating that this bounce here could be a dead cat bounce as well. So dead cat bounce, first resistance level to watch will be the pullback of this former minor ascending trend line, now turns into a pullback resistance at this 40, okay, for 6,000 6,000 level. So that's close to the psychological 6,000 level. So without doubt, no change, the pivotal resistance level will be this range resistance that is in place since 11th of June, last Wednesday, at 6,500 level. So first resistance level to watch for this potential dead cat bounce will be at 6,008, maximum 6,050, which is our short-term pivotal resistance for yesterday. So I'll be still using that 6,050 as my short-term pivotal resistance level on the SPX 500 to maintain our intraday bearish bias for today. First support level 5,920. A breakdown below 5,920 will unleash a minor bearish breakdown scenario to revisit, to expose the next support level, at least on the short-term intraday basis, will be at 5,850, which is pretty key as well. Why? Because that also confluence with the key 200-day moving average. Only a bullish breakout above 6,050 level will invalidate today's bearish bias to see a start of a recovery scenario for the SPX to seek out the next intermediate resistance at 6,093, then thereafter a potential retest at the current all-time high at 6,151. So that's for the SPX. Lastly will be the Nasdaq 100. So the Nasdaq 100 also have a very similar movement, hit 21,500, which is our first support level that we have yesterday in our bearish bias before staging that bounce up again. So that bounce up coincide with the RSI hitting the oversold level without any bullish divergence, so indicating some form of a dead cat bounce. So dead cat bounce potential first resistance level to watch 21,900. Maximum, that's our 22,050, which is our short-term pivotal resistance that we have since the start of Tuesday over here. So still using that 22,050 short-term pivotal resistance level to maintain our intraday trend, intraday bearish bias, for it to revisit that minor range support that very clearly has starts to form on 21,500 level. Only a breakdown below 21,500 level will increase the odds of this ongoing minor corrective decline sequence, which is also, i.e., a minor range bearish breakdown scenario that could unfold on the Nasdaq 100, exposing the next near-term support zone at 21,180, 21,030 next, which is the minor swing low of 2nd of June and 30th of May over here. Only a bullish breakout above 22,050 that would invalidate today's bearish bias to seek out the current all-time high area of the Nasdaq 100, which is at 22,200/22,250 level. So that sum up the intraday technical outlook on the major stock indices. So let us now focus on the commodities, starting with the gold XAU/USD. So for gold XAU/USD, yesterday we do have a bearish bias, with the support level to watch will be at 3,346 over here. So 3,346 has already been met before staging a bounce. And right now in today's Asia session, there's attempt a test of it again. And what's interestingly, at 3,346, we start to form a impending hourly bullish hammer candlestick, as you could see on my screen over here, for gold XAU/USD. So indeed, there is some form of interesting bullish pressure coming back into gold XAU/USD right at the 3,346 support level. All right, so with this support level that is still kind of stubbornly maintained, and this where is stubbornly maintained is stubbornly maintained at the rising 20-day moving average, and also right exactly at the minor ascending channel support of 29th of May. So given that it managed to form that impending hourly bullish candlestick as we are speaking right now, it's not very prudent to be very bearish on the gold XAU/USD, because this could be a tipping point where the start of a new impulsive up move may take shape, given that it has a confluence with key technical elements, rising 20-day moving average, as well as the minor ascending channel support. And if you do the Fibo retracement of this prior minor up move from the low of 9th of June all the way up to the intraday high of this Monday, that also confluence with the golden ratio of 61.8%. All right, 61.8%. So with that, I will be prudent to flip to a neutrality stance for today, which is also a Friday as well. Neutral between 3,346 and 3,400. Only a bullish breakout above 3,400, where we start to see a stubborn resistance that reject the boost since the start of this week. That would indicate the start of another impulsive up move sequence for gold, exposing the next near-term resistance at 3,423 and a potential retest early next week at 3,450, which this Monday minor swing high area. So for now, no conviction for gold to actually be a no conviction for a further bearish bias for gold, since it has already hit our support level that we highlighted yesterday at 3,346, which is the 20-day moving average as well, and all the elements that highlighted earlier on. We will flip to a neutrality stance for today, 3,346 and 3,400, and I'll be watching closely how the price action react again at the 3,400 throughout today's entire session. All right, so that's for gold XAU/USD. Now, onwards next will be the West Texas oil over here. So despite the West Texas oil initial plunge of 3%, so this long bearish Marubozu candlestick after Trump announced that he's giving a 2 weeks period grace for Iran, indirectly for Iran over here. I don't see any signs of a bullish exhaustion. The hourly RSI, there is no bearish divergence. Price action continues to inch higher high over here. Okay, so with that, I will be more prudent for today and having a tightened short-term pivotal support level, where the previously bearish Marubozu candlestick hourly candle on 18th of June, which is Wednesday at the 10 p.m. mark, Singapore time, managed to survive and stage that series of higher high and hit our support zone at 77/76, 77.60. All right, so our first hit our first resistance level at 77/77.60, so that we have that was our bullish bias for yesterday. So for today, I'll be having a tightened short-term pivotal support level at 73.20, where the previous bearish Marubozu candlestick did a bullish U-turn. So 73.20 will be my tightened short-term pivotal support level for today, still maintaining our intraday trend bullish bias for West Texas oil. First resistance level to watch remains unchanged at 77/77.60. Above 77.60 may expose 79.50 next, which is the 4.236 Fibo extension, and the 79.50, if we go back in time over here, okay, is also confluence with the congestion area minor one on 17th of January this year. Only a bearish breakdown and an hourly close below 73.20 that would negate today's intraday bullish bias to see it drifting down towards the 20-day moving average, and as well as the former descending resistance from September 2023 high now turns into a pullback support level, a crucial medium-term pivotal support zone confluencing with the 20-day moving average, and also that pin bar low that is being formed on Monday at 70.60/69.15 level. All right, so i.e. using a tightened short-term pivotal support for today at 73.20 for the West Texas oil to maintain our bullish bias. Okay, so that sum up the intraday technical outlook on the major cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today? So for today, upon the start of the European session at 2 p.m. Singapore time will be retail sales over here. So market is expecting a low ball retail sales year on year for May to come in as low as 1.7%. Okay, that's pretty low number. So that could potentially influence the movement of the sterling and the sterling crosses. Okay, because previously it's at 5%. All right, for April. Then thereafter, straight up towards the US session. So over the US session at 10 p.m., we do have a consumer confidence flash data out from Eurozone. So that could actually sway the euro dollar, the euro crosses, and the Germany 30 index. So market is expecting improvement from a negative 15.2 in the month of May. So there's June figure, flash June figure, to improve slightly to negative 14.5. And at 10 p.m. Singapore time, you have the conference board leading index over here up from US. And also bear in mind, today will also be triple witching. That means it's the major US option expiry on the futures, on the futures market. Also option expiry on the individual stocks, and option expiry on the exchange traded fund as well. So there could be potential two-way volatility in the major US stock indices for today due to this 6.5 trillion triple reaching option expiry for this week. All right, which is on Friday, okay, on today, on Friday. So that sum up the today's daily dose of market insights. I'm Kelvin here, signing off. I wish you all a great and restful weekend, and we shall speak again on next Monday. Thank you.